Hi, everyone. Welcome to Crowd Forecast News, episode number 170 for February 12th, 2018. Today we will be discussing the 229th weekly report. So if you haven't had a chance to take a look at this yet, you can go to TimingResearch.com and download the full PDF there. For those of you watching live, you should be viewing on the YouTube page where you can have the live chat, or there's the live chat section there where you can type in questions or comments throughout the show. My name is David Kosmitter. I'm the creator of TimingResearch.com, and I have Dean Jenkins here to moderate today. So I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David, for inviting me back to moderate. I always look forward to this. I enjoy it. We got a good panel today, and we've got a super interesting market. So lots to talk about. I'm looking forward to hearing what the other folks have to say about the markets and sharing my thoughts there too as well. You know, David, you just got to start recording the the pre-show conversation and comments. You do a little outtake thing, right? So for those listening, Lance and I were just talking about how cool it is to be a trader, to work from home in Hawaiian shirts and shorts. And this is like the dream job, right? And the cool thing for everybody is that it's absolutely possible to have that as a job, as a lifestyle, if you can get the discipline, get the system down, and be consistently profitable. So it's I think you're looking at a panel of folks who are doing it, right? And it's a super cool thing. So let's go ahead and meet the panel. Let's have we'll go in alphabetical order. Have each of the panelists just give a quick introduction, who they are and what their approach to the market is, and we will start in the B section with Bennett McDowell.
Thank you, Dean. Great to be here. And I also want to thank David as well. And nice to meet everybody here. Well, I'm with TradersCoach.com. I founded TradersCoach.com back in 1998, and we actually incorporated in the year 2000. And it's funny, back then, software was really very rudimentary, and especially website software. So we basically ran a website where we were managing money for other people. I was with Morgan Stanley at the time. And we used the website as a portal to communicate with my active trading group what we were doing for the week and so forth. But it was funny because it was all text chat and so forth. And then we progressed, and eventually technology increased, of course, and we were able to bring the website up to where it is now. And if you had asked me back in 1998 if we'd be selling educational courses, selling software, that was really not the plan. It was planned to be really a portal for coaching students. That's really what it was. So it's really progressed significantly over the years, and eventually we brought our trading system, which is called the ART system, that includes the AL, PTF, and TLM, and all our risk control software, to the market, and the rest is history. So we've been doing this for a long time. I actually started out as an options trader primarily in the very, very beginning, back in the 1990s. Progressed as things developed online, and currently now we trade stocks, futures, not too much Forex. Haven't done much in Bitcoin. Okay, I was kind of a little bit late getting started in that one, so I'm still learning about that. But we focus primarily on the stocks and actually the futures market. So it's great to be here.
All right, and good to be here with you, Bennett. All right, Jim Kenney, a little bit about you and what you got going on.
Sure, Dean. I provide the content over there at optionprofessor.com, and we've done it for decades now. And essentially, it's trying to explain and give you details on how the different uses of the options can be done. Recent time, when we're up at 2,900 on the S&P, and the 200-day average is down at 2,500. And the VIX is pretty stubborn, around 10 or 11, unwilling to go much lower. The setup for doing collars or married puts was pretty obvious in hindsight, but pretty obvious even if you were in there as far as a probability is concerned. So there's a lot of strategies out there, but some of them are, shall we say, protect your butt strategies. And those who've employed those into that major advance are sleeping a lot easier in the last 2 weeks than those who didn't know how to do it.
All right. Option Professor. Very good. Thank you, Jim. And Lance, if you introduce yourself to the folks tuning in here.
Hello, everyone. I'm Lance Ippolito. I started off for Citigroup Global Markets and then became a CTA, mostly trading futures. And now I'm trading live at Alpha Shark .com, where we have a live trading room. And then on my own, I also do some personal coaching and trade alerts and private Twitter feed. Anyone can find me for free online at twitter.com /Ippolito. But I'm primarily an options trader right now. I follow institutional order flow in the options market, and I try to track unusual or suspicious trades and piggyback with the whales, which I like because right now with the markets going wild from 500-point swings, I can focus more on individual names rather than the indexes. So trading, to me, I keep it fun, I keep it entertaining. Like we were talking about before, I don't know if I could ever go back to wearing dress shirts and slacks and dress shoes every day. Living in Florida here and trading professionally, it is literally the greatest job. And if you get good at it after a number of years of struggling, and you get a system down, it is quite an enjoyable lifestyle. So very happy to be here too, by the way.
All right, and good to have you here. We've been on a few times. I always enjoy your comments and snagging some of your trade ideas.
Thank you.
I like the comment you made about having fun trading. Bennett was my mentor, and he's here now. And one of the things he taught me was trading should be fun. It should be relaxed. And if you're stressed out and you're trading, something's wrong. You're doing something wrong, man. Right? If you're experiencing fear, worried about the outcome of trade, you're not doing it right. And once you get to that mindset, right, trading is fun, win or lose, right? As long as we're winning more over time, right? Trading is
exactly.
It's an incredible thing. It's a fun way to make a living. And you get to meet cool people like Jim, Lentz, and Bennett here. All right, well, let's get into the meat of the show here. This is the Crowd Forecast Show, and David has run his magic algorithms, and based on his formulas and history and the respondents to the survey, I believe, David, you are predicting the market will go higher by the end of the week. Is that correct?
Yeah. Both the overall sentiment from the survey and my crowd forecast prediction based on the history is showing a likelihood of higher this week.
Okay. So first question for the panelists is, what direction do you think? S&P 500 from Monday's open to Friday close, up or down? And what's your confidence level on that? In the next round, we're going to get into the reasons why. You can show a chart. You can talk about fundamentals, phases of the moon, whatever you like. But first round here is just going to be, I've read articles, serious articles where they talk about phases.
Yeah, that's why I'm laughing. Yeah.
Apparently, that's a legitimate approach. I want to see the back testing on it. Anyway, for the panel, what do you think? Up or down by the end of the week, and what's your confidence level on that? And Bennett, if you lead us off.
Okay. Yeah, I'll show you a chart on question number 3, but I really think we'll head up for the week. I agree with that. I think probably confidence level around 80% on that. So I think we'll end the week higher. And we'll talk about, I think, specific numbers a little later on.
Okay, very good. Very good. So Bennett's up. Jim?
Yeah, it looks to me like there's more room up to 27.25 or 27.65. So they're still rebalancing this thing, and it could go up this week, and probably about a 60% confidence level.
Okay, up 60. Lance, you can't be a crowd follower here, man. Do something different.
I think the market is going down.
There you go.
And the confidence level is 50%.
You gotta be over the line. 51.
All right, 51. I tried being so I could play both sides, but there goes that now. Got called out.
Right. Okay. There are strategies if you're at 50% though, right?
Yeah. Put on Iron Condor right now. No.
Okay. All right. So we got 2 up, 1 down. At this point, I hate to give a prediction because the big event of the week is going to be Wednesday pre-market when they release CPI, and that's going to change everything, right? That's the big deal. So I hate to make a prediction now, but if just based on the current snapshot, current technicals, I got to say up, but I kind of hate it. And I got a 51% probability on that because, again, I think there could be disruption coming. All right, now we'll go back around. So we got 3 up, 1 down. And it's good to have a little dissension, right? And spark a little discussion. All right, a little agreeable disagreement. But now we're going to go ahead and share a chart and get into maybe your rationale, why you think it's going up, any kind of analysis or whatever techniques you like to use. And Bennett, you're up for a bit of a discussion with a chart or indicator.
Okay. So let me share a screen here. Give me 1 second, and you should see in a second my screen. You got it? Oh.
Yep, looks great.
Okay. All right. So right now I got the Dow. So this is not the S&P, but they pretty much are going to move in sync here. But what we notice, this is a 60-minute chart, and I like to look at the 60-minute chart for these short-term type of what I call guesstimates that we talk about here. So we're talking about 5 days. So the 60-minute chart is pretty good for this. The daily chart sometimes is a little bit of too long a time frame to tell you what's going to happen Friday. So 60-minute works good. Now I put a couple things on this chart. One thing is, and Dean, you'll be familiar with this, of course. This should look just like your chart. But here's a number 3 that stands for an Elliott wave 3 on the 60-minute chart. Been doing the Elliott wave for a long time. So we continue to use that. It's just one of our tools in our toolbox, so to speak. You also see things with triangles and all these 1Bs and 2Bs. This is the part of the applied reality trading system that we use here. And also indicators at the bottom is a part of our system as well. So one of the things that I look for is clarity. And a couple of things really shine out, as I'm sure you saw, Dean, as well in your charts, is that, we trucked right up. The market pretty much ignored any bad news. I mean, there was 100 reasons for the market to sell off this year, and it didn't do it. And that is so typical of an impulsive wave. And we see this impulsive wave also on the daily chart as well. But on the 60-minute chart lately, what happened is it reached the top, and then take a look at what happened with the momentum. It started to falter and break right exactly at the time a recent high was made, and then it started to break down, and our system identified some bearish trading patterns coming up called pyramid trading points. So actually what we do is enter when prices go 1 tick below the apex of the pyramid, which is the pointy part. Stop goes 1 tick above it, and we don't take that trade unless things down here, all right, are in alignment or confirm with the price patterns. And as we can see here, momentum was turning bearish. That's something we do watch. And also too, the PTF, which is this indicator in the middle, started turning red, and we hadn't seen that for quite some time. And basically when it turns red, it's telling us there's a 75% probability the market is heading lower. And when it turns yellow, it's neutral. Well, if you can see here, we had a very clear ABC Elliott wave correction. So this would be a 4 down here. We still have bearish momentum, so we got to keep an eye on that. It's possible we could make one more low on wave 4, but we'll take a look at that and see what it's doing recently here, because things can change awfully quick. But here was a kind of a key thing. The PTF turned yellow here, and when it's yellow, that's neutral, so it's not guaranteeing or 75% guaranteeing any more lows. So when we see that after it's reached a Fibonacci target zone, which it did here beautifully, we had a clear ABC pattern, then that's ripe for a march up into what we call Elliott wave 5. And if that's the case, it should exceed wave 3. So we really could be climbing out or ending this particular sell-off that we've seen really since the end of January till the current time period. Now, what could falter that? Well, we could get one more low before wave 4 is definitively in. And we have to be careful because we don't want to say wave 4 is definitively over, really, until the owl here turns green. So I want to take a quick look, and then I'll pass the baton here I want to take just a quick look and take a look at the actual chart here for today on the 60-minute, because we've got a little bit of more price bars to look at. And one of the key things I'm watching here is look how close now the owl is for going green. So if that goes green, then that's going to further the case that this is a significant bottom and we should make another high. Now, I will say one thing. After we make the next high, all right, then we're at the end of a major trend here, and we have to be a little more careful at that point. But I do think by the end of the week, we'll climb out of this. Won't be a straight line up, and that will be the wild card. You know, if by Friday it happens to be coming down here, well, then my forecast will be wrong. But I don't think this bottom will be taken out, and I think it eventually will climb out. So that's my forecast.
All right, very detailed, very compelling, and pretty similar. No surprise to something I'm looking at here as well, Bennett.
I wouldn't think so.
Yeah. All right, Jim, you were up at 60%. If you want to go a little deeper on that, maybe you're thinking behind it.
Well, I just looking at some of the option stuff on the put call ratios and how the front end of the options were exploding versus the longer dated ones last week. So this rebound back up, you know, is not too shocking from the standpoint of after all those guys who got squeezed out of the volatility trade were done. There's no real volume pressing it after that, so that's why, you know, it can come back up. Not only that, you know, the powers that be or whatever, the people with the money that move these things, you know, they don't need that consumer freaking out and not going to the malls. So, you know, if they got a few more days like last week, they would have been probably sitting on their wallets for the next few months, and that would probably kill the economy pretty good. So for, you know, just logical reasons like that, bounce back up doesn't make you know, much of an argument. Now the question is, how far does it bounce back up? And those numbers I picked are the recent highs on some of the days from last week, 2730 area and then 2765. So I would think once we reach up there, then the vulnerability to go back and retest would be more apparent. But you know, basically that's what I was seeing right now.
All right. Very good, sir. Thank you. And Lance, you were down 51%, basically unsure. So,
so kind of, I have a little bit of different approach than everyone. So when I look at, you know, this morning, for example, the price action, how we dumped right before the open, and then we rallied, and then we dumped again, and now rally here. I'm mostly looking at what's the overall view of not myself, but of others. And if we look at the S&P at 2680, that was the start to the 2018 and January 2nd, I believe. In January, if you look at the stats coming out of Schwab or TD, that's when a lot of retail investors got into the market. So if I'm a retail investor and I start deploying capital into the stock market with the S&P at 2680, 2700, 2800, and let's say we rally back there, so that's about what, 52, about 25 points or so. There's no free lunch in the financial markets. I think they're going to get punished. So just like this today, or I should say this morning, how we have that rally, I think what's going to happen this week, it may not happen today or tomorrow, maybe Wednesday or later in the week, we have one more downdraft to shake out the weak hands. You know, as traders or professionals, I should say, we want to be strong hands, and the retail, the people not in the industry, are the weak hands. I think they get shaken out one more time, so where they can't stomach the pain, and then after that, we have a blowout rally, which it might be towards the end of February or March, but I just think we have a little bit more volatility, and we continue to see negative, or should I say bearish price action for this week.
all right. Very good, sir. Cogent argument. And so I'm sharing a chart now, and I'm showing a 30-minute chart on the S&P 500 futures contract. So I did start on the 60-minute like Bennett, but now that we've got these big moves, I've shifted over to a little bit smaller time frame right now. And I'm going to get my pen ready and do a little drawing here. So we actually took this trade on the 31st, right after the FOMC announcement. We went short here, and were able to take that whole move and then got out here as it pulled back up. That was really cool. So that was an Elliott wave 3 on the 30-minute chart. And then we had a really nice wave 4 right into this Fibonacci retracement zone. And so we looked for it, and the indicators worked. We got a nice pyramid entry point, and right below the Ichimoku cloud. So I combined that. So we were short right about here and took it down again, and then got out as it started pulling back up. So that was really fun. And so the whole system worked. What we got going on right now is after this wave 3, kind of a perfect wave 3, perfect wave 4, perfect wave 5, just got into the target zone below this green here. So on this time frame, the next move after 5 waves is typically an ABC. And we got an A, we got a B, probably going to do this. So that's why my prediction by the end of the week, that'll take a couple days to play out. But again, Wednesday, pre-market, 8:30 Eastern, the consumer price index gets released, and all narrative is that this sell-off here was caused primarily by fear of inflation starting to take off, and the Fed then raising rates, and then the equity market being less attractive, blah blah blah, all that kind of stuff. So if CPI is high, I think that restokes that fear, and we'll have to see. That could be disruptive pre-market Wednesday, so we'll have to just wait and see how that plays out. So I'm not trading the indexes until after that comes out and happens, right? I don't want to take a position into known volatility unless I'm doing a volatility strategy, right? And unknown direction, but pretty high probability of volatility coming in. So that's my rationale for it going up. On a daily chart, I think there's something pretty interesting going on the S&P. Let me go ahead and clean this off, get back to a mouse cursor, and bring this over. I think something interesting to watch on S&P daily chart, here it comes, slowly but surely. Oops. Is, get my time frame right. So the S&P, after this big, amazing, 8-year run up and going parabolic in January, and then this breakdown, it did get down below the Ichimoku cloud, and it came right down to the 200 simple moving average. And that 200 is a pretty important indicator, probably the most popular indicator across all traders, is the 200. And it hit support right there, right at it. Now, if we go back up to the cloud, which is now our resistance area, reverse, and we do get below the 200, then we've got, low, lower high, new low, a potential shift in trend. So I'm watching that, and I actually hope, not that I want to see anybody else lose money, but, I think we're ready for a big correction. Here we are in the weekly. If we can get a correction going, right, midpoint of that correction is down around 1864 kind of time frame. So not calling that yet, but if those earlier things that I talked about, if we break the 200 on the daily, we might have something big going on here, and be watching closely for that. One of these days, so again, not calling it just yet, but we're waiting and watching for it. So that's my take. So I said up, I'm at 51% probability on that, or confidence on that. I think the analysis is here for it moving up the rest of the week, but we have a potentially disruptive event midweek. That's my story, and I'm sticking to it. All right. So next question here in our sequence is, what trade do you like right now? What are you looking at, or what did you just get in that maybe has potential entries for folks who are be looking for something to trade? And Bennett, you lead us off with what you like right now.
Okay. Let me just show my screen here. Give me 1 second. All right, you should be able to see it. By the way, this is just the Dow. Dean, I thought your assessment on the daily chart was outstanding. Okay, you can hear me now, right, everybody?
Yeah, you're good.
Okay, all right, just want to make sure. All right, so I thought that was really good. I took the liberty here, Dean, just a little off the winding path here, of putting a possible wave 4 target zone here. So if the market does sell off again and that bottom doesn't hold on the 60-minute chart, I agree with you. I think we're going to be in for something of a more insidious correction. But I don't think this is going to happen the way it's because that key level of support held, and also too we have a green PTF, and it was pretty clear on the 60-minute chart. So I think we're going to get one more high before we do get a much more significant sell-off. So I thought that was interesting you brought that up. All right, on stocks, EC. This is one that we like. We're in this one for a long time. We've been in this since last July. We got in just under 10 bucks. It's at 16.98 right now. We think it's got quite a ways to go. I've got basically 3 charts up here. I got the 60-minute over here. I got the daily here and the weekly here for the long-term, intermediate, and the short-term. So we winded our way down. We think this is kind of what it's looking like here. We winded our way down into the wave 4 fib corrective area here. We got a little bit of negative here. We may go back in there. We still have a kind of a negative short term. But I think overall, long term, once the momentum comes back, I think this is a great trade for everybody else as well, because I think the profit opportunity is around $27 up to $41 for a more significant longer term type of trade, or at the very least for a wave 5 into the 25 range. So we like this one a lot. We think it's pulled back with the market, but not too much greater than really what it should have on a normal pullback. So this one really looks really excellent, I think, going forward, especially when the market starts to recover after this correction. So that's my favorite one for right now. It's EC.
All right. Echo Petrol, SA.
Yep.
Long on EC. Very cool. All right, Jim, what's got your attention? What are you trading right now?
Well, on the strategy front, before, in the weeks past, we were talking about strangles because the premiums were kind of low and the market was kind of at a high point there. So the strangles were obviously, in hindsight, a very good thing to work with, and also the collars and stuff like that. Sometimes standing aside is not the worst thing in the world to do, because right now, I think most people, I would say this, most people think that low is going to hold up and we're going to bounce back up. So with that popularity of a view, you got to be a little careful about that. And then, of course, shorting down here or doing anything like that, we've seen how that can work by the thing running up. So I'd be a little bit careful here, and I'd probably, because we've created such a big wide range now, and the bounce back up is pretty logical. Now the question is this going to roll right back over again? So it's kind of a tough environment. If you're a real bull on this stuff, these puts are probably pretty fat, and if you have the money in there to buy the stock, if you get put by it, that might be something. And if we do spring up a little bit further, redoing collars might not be the worst thing in the world either. So when the premiums are very high, you try to look to strategies where you can use them to your advantage. When the premiums are low, like they were before the big drop, again, you try to use the strategies that are on more of the buy side than the sell side. So right now with the premium so huge, obviously selling type strategies would be of interest, but in this market that's bouncing back and forth, it's a rough racket. I think on a bigger rally, the collars might be interesting, and on another dump, if you really love the company, you might price out the puts if you have the money in your account to buy the stock if you get put.
Okay. Thank you, Jim. Lance, what do you got in your sights, sir?
So I normally focus on names that are odd and different from the market, but I have to say one stock that really stood out over the past few days was Bank of America. It's the leader of the financials, I think, out of all the other names compared to, let's say, like a Goldman Sachs. And it technically, during the last downdraft in the market, Bank of America held up really well, defending that 29 level. Here it is back above 30, actually 31.25 here. And every dip from this morning to even during the steep sell-offs, funds were accumulating Bank of America calls. I saw put selling, I saw call buying, just very bullish flow even this morning as Bank of America pulled back with the overall market. I mean, you just have dip call buyers coming in from in the money calls, at the money calls, February, March, you name it. And here the stock is up 3%. Just looks like a standout star of the overall market when some of the markets are indexes, I should say, seem a little shaky here.
All right, Bank of America. Thank you, sir. So I'm showing a chart here. This is the 60-minute chart for gold futures, the current front contract. And Bennett, this probably looks good to you as well because we're using very similar methods. But this run up from December up to the end of January, this is a super clear wave 3 on gold futures, and then a picture perfect wave 4 into this Fibonacci retracement zone. And now we're seeing the momentum shift. We got the owl, the momentum here getting bigger and bigger with these up moves. We got a nice sequence of higher highs, higher lows, higher highs. We're about to get a green pyramid. We're above the Ichimoku cloud. So we've got a nice wave 5 target on gold up above 1386 to up around 1433. So this is 60 minutes. So I took this trade in the trading room this morning. We published it. So we're not trading it with futures. I think the futures contract, because it's trading nearly around the clock, gives the highest degree of resolution on it. But we actually took this using GLD and took bought call contracts on GLD, which will march along with this in a proportionate fashion. So long on gold, man. I think we're just getting into it, and I think we got some room to go. That's the 60-minute analysis. But I cross-check it on the daily and see if it makes sense on the daily or if we're fighting something here. And so here's that big impulsive move up. Here's the correction down. Found support right at the Ichimoku cloud. We're heading up now. I think it looks good. We got a potential significant resistance area at 1372, which is just short of our price target on the 60-minute chart. So if it fails and stops at 1372, it's still an okay trade. It's still got a good reward to risk ratio on it. If it only made it from here to 1372, I would still be happy with this trade. So it could fail there, or it could go on up and make new highs. Either way, I'm in. I'm long on gold. So I don't know, Bennett. You probably see this pattern as clearly as I do right now, right?
Dean, I do. In fact, I just loaded gold out. Even the long-term charts are pretty significant on it and very clear. The 2011 high was wave 3, according to the Elliott wave, wave 4 bottom in 2016, and a wave 5 target zone around 181 to 232. This is the GLD. So this is the ETF one I just pulled up. But, right. It looks pretty good, and I agree with you. I think, it's getting ready to move. We've had maybe 1 up here, 2 to the down. Compression should go, something like that. So I'm with you on that.
Yeah, it's interesting. So the 60, the daily, the weekly all line up bullish right now on gold. So
I think you can hold it for a long time.
Yeah. So we're in, man. We're in. Yeah, I like it. I'll show another one. We got a little bit of time here. This one, the same kind of approach, the same kind of analysis, and it's too late to get in, but it's fun. Every time you got a winning trade in play, it's fun to look at it again. So this is TLT. We're short TLT, and this is the 20 plus year bond, treasury bond ETF. There's wave 3, super clear, nice wave 4 into the correction zone. It handled and then it broke, and we caught this break right here. The pyramids did a phenomenal job of giving us an entry. Now we're trailing our stop. We're in profit, taking profit, and we've got a target down here below 114 to 104. And again, the CPI could have a big impact on this one as well. So watching that, we're already in profit. Even if we were to go get stopped out now, it'd be a winning trade. So that's not a bad proposition. So it works. It's good fun.
Yeah, that looks like a good one too. Excellent.
Yeah, and we got in at this light blue line right here. We're in already taking profit on this trade. So can't complain about that.
That's where you want to be. Good.
Yeah, we call it the catbird seat in my trading room, where you're in a position where no matter what happens on this trade from here on out, you've won. The only question is how big is the winner. That's the place to be, right?
Yeah, we call that the stress less trade.
Yeah. Okay. So hey, let's move to question number 4. the special question for the week, and it's a good one. So the question is, what trading related skills do you want to learn or improve in 2018? And so for each of the panelists, here's do a A/B answer for that. First, what do you personally want to learn or improve this year? What are you working on? And then B, what would you recommend, kind of a broad sense that people work on? And so Bennett, you're top of the batting order again. So go.
Okay. Well, I think probably, I'll start out with B and then go to A, okay? I think if you're new in the business, I think you really got to focus and understand risk control. Dean, you and I talk a lot about that. And I think, while you're learning to trade the markets, there's so many pieces of pie you have to master. And it's not easy. And it's very emotional. You can get very emotional. I think when new traders start out, they don't realize how your emotions are going to impact your results. I think that's one of the big surprises people have when they begin trading. They hear it, but they really don't understand it. They kind of think, well, if I have the money to enter the trade, this is exciting. That's my ticket into the game. But then they realize how even when they're in a successful trade, their emotions can literally talk themselves out of completely good trades. So you have to master your psychology. And while you're doing that, the best way to do that is really just get into the markets and don't blow up. And I think you have to have risk control to keep you from doing that. And I think you do have to paper trade. I think you have to have a game plan. And then, you just don't want to blindly walk into the markets without a game plan. So you have to have that. And paper trading can help you with that. But also, too, there comes a time when you need to go into the markets and feel the pull of what it's like to have real money on the line. And that's where risk control can come in. And if you have a good risk control system, but not a great trading system, you'll find that you don't really make money, but you don't really lose a lot of money. You kind of bounce along, and that's okay while you're learning. So I think that's an important part. Risk control is something that a new trader needs to master really early on in their game. In terms of me personally, I'd like to learn a little bit more about Bitcoin. I don't know much about it. I kind of stayed away from it. I thought it was a little bit of a fad at first, so I didn't really get too serious about studying it. But I'd like to learn more about it. It certainly appears like it's here to stay. So that's one thing I want to do this year. Also, too, we've been doing the trading for a long time, so we kind of have a pretty good system in place of what to do when we find a good market. How to apply our tools and how to monitor the trade and how to do risk control, add-ons, and when to get out and so forth. That's really, at this point in my game, not an issue. But I'm always looking for ways in which to find markets, part of the scanning part of becoming a better trader. I think there's so many markets out there, and there's so many different ways. We have a few ways now that we scan for the markets, but I'm always trying to educate myself on finding better ways to uncover opportunities. And then once you have the opportunity, hey, you apply your trading approach. That's really not an issue. But I think all of us, want to get into markets that are moving quickly versus ones that aren't moving as quickly or just are plain bad trades. So I think finding good markets is something where I'm going to work more on this year as well. So that's it.
Good stuff, Bennett. You stole my my B answer, so I'll come up with another one.
Okay, sorry about that.
No, but it's so important, right?
Yep.
Before you do anything else, get a grip on risk control.
Yeah, you really need to do that, and it's not sexy, and that's the problem. Is it's kind of not exciting, and so people tend to not learn about it until after they've had that big loss and realize that they need to know that.
Yeah, definitely. Okay, Jim, A and B, what are you learning this year?
If you're just starting out, Dean, I think you've got to try to determine, where you think these markets might be going. And rather than just doing it off the top of your head or listening to people like us, you might want to go and, look at some factual information like the moving averages. to give you a little bit of an idea of where the moving average of price is going and where's the market in relation to those moving averages. And then after you see those type of things going on, you might want to just, see what strategies might make the most sense probability wise. So if you get 400 points above the 200-day average on the S&P, probabilities, since we have to figure infinity is not an option, at some point, the risk is getting higher and higher and higher as it goes higher, not less and less. So, looking for setups and using the moving averages is not the worst thing in the world to do. And then look where the winds of change might be blowing. Like right now, a couple of people like Jeffrey Gonlock and Goldman Sachs are fairly keen on commodities, which really most people can't spell. That's how out of favor they are. And so that's probably a good time to take a peek. Now, what would make those things go up? Well, how about deficits going through the roof? That's probably not a bad thing for the commodities. And what about the debt situation out there with regards to any disruption of debt? And then other things such as the debt, people aren't talking about this. I think this is the biggest news out there right now. They've just suspended the debt ceiling till March of 2019. Well, that means the Treasury can do whatever they want up until 2019, which I think, for your gold bugs, I think that's got to be a rather positive thing at some point, because I don't think the government has showed much restraint when they had a debt ceiling. Well, if they don't have a debt ceiling till March of 2019, what kind of explosion in the deficit is going to happen? And then the other thing is the come line that we're set up on, where we've cut our revenue from taxes, and the expenditures are going through the roof. And, just using common math, how's that going to work out? Well, obviously, it's going to work out with a lot of debt coming out of the Treasury, because that's why they just suspended the debt ceiling to March of 2019. So having said all that, the likelihood that there could be some big volatility in the commodity sector, either deflationary, inflationary, I think is increasing by the day. And if it does roll over to the debt markets, Dean, you were talking about the TLT, you're talking about it going down a little bit. We see when these things really break, they don't go down a little bit, or they don't go up a little bit, because everyone wants to get out of the game at the same time, like the volatility sellers, right? So I think this year is going to be very, very much different than what we've seen. I think the honeymoon's over with this never drops more than 3%. And this idea where everything is very stable, I think that party is definitely over, and that ship has sailed. So I'm expecting to have some significant volatility. And I think the deficits and removing the debt ceiling constraint is going to be two factors. And then all these bonds that were issued and all these low yields, people want to get out of that stuff and nobody wants to buy it. That's going to be messy. And I guess I would say that the possibility of messy this year has gone up substantially.
Okay. I'm looking forward to the day you have an opinion, Jim.
Well, I read a lot.
Well,
I contemplate the world too much, I think.
So Lance, what would you personally like to learn this year and improve on? And then what would you recommend in a broad sense for people watching?
So personally for me, and I keep harping on this probably every time I come on, and I do this every day, is not to look at 5-minute, or I should really say intraday charts, unless I'm specifically day trading, which I'm trying less and less to do, as I'm trying to focus on swing trading and start looking at more 4-hour and daily charts, even weekly charts, more long-term charts, and really have the mindset of what is the goal of the position, or what is the greater good. If I'm taking a position that potentially has a catalyst or an earnings event or some kind of buyout, then I'm going to risk, a small amount of capital, but know, hey, I might be risking 30 cents in the option to potentially make $1.50. Or if this event happens, this is the overall outcome, with the full intention of, if nothing does happen, I lose that initial premium. But starting to look at the long-term charts and the long-term goal of the position, and not necessarily, because this is what hindered me in 2017, as I paid way too much in commissions, is let's say I buy an option for 50 cents and the stock starts going in my direction, and that option goes from 50 cents to 70 cents, I take some off or I sell it. And then if it go to 80 cents, I sell the rest, just to, wake up a few days later and now the stock's up, and now the option's marking $1 or $1.50, and I could have made a double or 3 times my money. It happened way too much in 2017. I could probably say, granted, the market only went up, but I wasn't letting winners ride, and I should have did that more. And for new traders out there, the mindset of trading or your positions, I try to have not the mindset of myself or what I'm thinking. I'm trying to think what others are thinking. Previous guest just spoke about, hey, I think too much, or we're all thinkers, or we dissect everything. An example was the other day, the media had markets in turmoil, and I kept saying to people, usually when we start having these fears or retail panics or these specials, it's usually the best time to buy equities. Just like I remember being on the trading Russell futures and Dow futures, S&P futures over the past few years, and the select times where we were limit down. Every time we get limit down, I'd go run up and see the market to say, hey, everyone's panicking. This is probably the best opportunity to buy. So really trying to dissect what people on the other side of the trade are doing. Just like a poker pro may have 7 deuce in his hand and his opponent may have pocket kings, but if there's an ace on the table, maybe that guy thinks I have an ace in my hand or a pair of aces. So dissecting not necessarily what you're doing, but what others are potentially doing and taking advantage of the other side.
All right, good stuff, and appreciate your transparency there on what you learned during 17. For me,
I hope it.
Yeah.
Go ahead.
Yeah. For me, so I'm primarily swing trader. Using Elliott Wave as a basis, and then some other tools to confirm it. And I actually loathe getting into mature trends. Right, makes my skin crawl. And probably you taught me that, Bennett. Right. But, 2017 was a trend trader's year. Right. And it was hard to find a good setup because everything was in a mature trend. So I would like to learn, a technique and an approach to consistently profitably trade long mature trends, even though it makes me super uncomfortable. I also have been working on a new strategy for, known volatility. For earning announcements or a big drug announcement or a CPI announcement, right? And have the pretty good basis for a strategy put together. We actually took 4 earnings trades. We took Apple, Facebook, AMD, and Intel. 2 winners, 1 loser, small loser, 1 break even. So I'm just refining that strategy. We're using option strangles on earning and just kind of refining the candidates and the management of the trade and all that kind of stuff. But super interesting. So we get earnings, right, 4 times a year, and might as well have a strategy to deal with that and identify, potential big volatility and try and capitalize. And, earnings or other big announcements, you can expect volatility, but you can't predict direction. And so there are approaches to that. It's kind of fun to work that out. Yeah. In terms of what I would recommend other folks work on. Of course, Bennett, I think he nailed the number 1 thing I would recommend, which is risk control. If you don't have risk control, it doesn't matter what your strategy is. And the other side of that is the thing you mentioned, Lance. You gotta let winners run, right? That just makes the whole statistics of trading work. If you just got to be a 50% trader. All you got to do is win half your trades. If you get your winners to be double the size of your losers, man, you're raking in cash.
Exactly.
And it takes the pressure off. Every trade doesn't have to win. It's really, really good. But so the other thing, on top of risk control, the only thing less sexy than risk control is backtesting, right? Backtesting is a drag, it's drudgery, but I don't know how I would never go put live money in the market without backtesting the strategy and see, does it even have a chance of working? And you got to get a good statistical sample, 30 plus trades legitimately backtested. And that doesn't mean you have to go code it and write all this stuff to automate a back test on a platform, but go back and look at history, look at the setups you're looking at, and then play it forward and see if it worked out or not. And you have to do that in a very intellectually honest way, right? But I think back testing is the next thing you got to do before you put real money in the market. And then you probably want to forward test it in sim, which is not very sexy either. And I get a lot of frowns when I talk about sim testing, and people say, well, sim testing doesn't really equal reality. And here's, kind of my maxim on sim testing is you're right, it doesn't, right? There's nothing like having real money, and I like Bennett's term, that pull, right, of real money on the line. But if being profitable in sim does not guarantee you will be profitable in live trading. But if you cannot be profitable in sim, I'll guarantee you will not be profitable with real money, right? And so I think that's an important step. Back test and then forward test in sim before you go live. And it's a ton of work, and it is not sexy. But, are you in this to make money, or are you just, not, right? You got to approach this like a career that requires significant preparation and training, like any other, professional career, in my opinion. All right. Well, we're at the end of the show, just about. So this is where we go around and, just any kind of closing final thoughts. If there's a link or a web page you want to share, something like that for each of us. And one more time with you, Bennett, just any closing thoughts you have.
Okay. Hey, I thought we covered some really good material today, and especially good material for those watching out there. Dean, I think you're right on the money with your risk control and testing and so forth. I think it's really important. And I think, the goal of any trader is to produce some type of system that gives you an edge. Doesn't mean you're going to win all the time, but you have an edge. And with that edge, you can develop kind of a cookie cutter that you can apply on any market in any time frame. We all have opinions, and the purpose of a system is to validate the opinion. And you may think a market's going up, and the Elliott wave may tell you it's going up, but that's an opinion. All right, it's not necessarily reality until it happens. So your trading approach has to take into consideration what the market is telling you. And I think price patterns are an excellent thing to look at, because that is the reality of the footprint of the market. And it creates support levels and resistance levels that are important to us as traders, as technical traders. And I think it's important to realize that, the market, again, has to substantiate whatever our opinion is. So we may have very elaborate opinions. I have met some extremely smart people in this business that can't trade their way out of a paper bag. They're stuck in their opinions. And you have to have a form of validation, and that's where a trading approach comes in, keeping you honest. It's kind of like when a pilot flies a plane, all right? He may have an opinion that it's going to rain, okay? Or he may have turbulence or whatever. But he needs to rely on his instruments, all right, to tell him exactly where to go, what to do, and if he's flying level. So I think you've got to have a combination of the two. All right, you don't certainly want to bury your head in the sand and just trade with technicals or just trade with opinions. So it's the proper combination of the two. So I think that's what everybody really should strive for. And it's not easy. Good trading, once you get it, all right, is actually kind of boring, because it's very systematic. It's fun, but it's systematic. And I think that's important to realize as well. So it's a pleasure to be here. I've always enjoyed meeting new people, and I think traders are the greatest people in the world, true entrepreneurs. We don't get paid unless we're successful. I mean, you can't have it better than that, right, folks? I mean, that's what it's all about. So, there's nobody holding your hand. You got to hold your own hand. And I commend everybody for taking that plunge and step. Okay, so great to be here. Thank you so much.
Hey, thanks, Bennett. Great to have you here. And it made me smile when you said, the trading, basically it's the purest meritocracy you're ever going to find, right? So many
Absolutely.
So many companies strive for meritocracy in their compensation. There's nothing like the markets for meritocracy, right? There's one measurement. You either make money or you're not.
The markets don't care what education you have. They don't care where you came from. They don't care who you are. Okay, you're either right or wrong, and that's how you get paid. I mean, you can't have it any more honest than that. And that's I think one of the draws for all of us of why we're here.
Yeah, very cool, very cool. All right, Jim, closing thoughts from you, sir.
Sure, Dean. Just a couple of things. For those out there, if we're the pullback is going to hold, like they did in 2016 and 2015 August, then you could start going and looking back into the sectors that were performing before we had the pullback, like the financials in Europe and emerging markets, energy, industrials, and all those kind of things. So if the pullback does hold up, it looks like those are the players that might come right back into the fold. As far as options are concerned, one way of letting your profits run a bit but taking money off the table is rolling up your position. And that's where you buy an option for 50 cents and it goes to $1 and you take the dollar off the table and then you move your strike price up if it's a call to a cheaper option. And then the market will tell you when the run is over rather than you trying to crystal ball it, which can have a spotty result. But when you see a market continue way past where you got out, one way to remedy that is just rolling up your positions. It's not a panacea, but it's a way of trying to manage the volatility a bit. Second thing is with the short-term strategies that you're looking at, you might want to consider longer-term limited risk strategies, so that maybe you could be in there for a bigger part of the run, or that maybe you thought 27, 2800, 2900 was a little rich. Had you gone with a longer term put while the VIX was down at 10, you wouldn't have had to worry day to day if it's going to pull back or not. You would have made a more general statement. So longer term limited risk options sometimes are not a bad way to go. And then the final thing is we're all talking about quantifying your risk and making sure that you don't have a problem with regards to your risk going beyond your means. Strategies like collars, which I've always talked about, and married puts, which I always talk about, are very effective ways to put some quantitative analysis, or to quantify your risk, so you know exactly where you are on the upside and downside because you bracketed your position. So optionprofessor@gmail.com if you guys want to learn more. And the panel was great today. I really appreciated being here with you guys.
All right, thanks, Jim. Good. And Lance, have you wrap up here? But I really liked your thought too about you're going to move to a little bit higher time frames. Just a quick comment on that is I've learned I started as a day trader and then moved to larger time frames. Larger time frames are easier. They just are. It takes less energy, right? There's higher probabilities, all that kind of stuff. So I'm with you, man. It doesn't mean you have to go to daily, weekly, but just a little bit bigger than intraday, I like better now.
Yeah, me too, because I found a problem, and I think a lot of people have this problem, is you get glued to the machine, staring at all these 5-minute or small time frames, and every tick you're counting on to see if it goes up or down or up and down, and it's an emotional roller coaster in your head. And I'm 29 and I have wrinkles and gray hair already. I don't want any more, But to wrap it up, people could contact me, Lance Ippolito, on Twitter. If they are interested in a live trading room, we have one at Alpha Shark, which I'm on for about 1:30 a day. It's, as we spoke about before, it is the, I call it the greatest profession. I don't even consider it a job. Obviously you're going to put in your homework and pay your dues if you want to be successful, but it creates an opportunity for, I feel like, a stress-free lifestyle rather than waking up and going to an office every day. And you really do decide what the outcome is. If you want to take a week or two off to step away from the markets, that's fine. If you want to go travel, that's fine too. Or if you want to dig right in and say, hey, I want to make $10,000 this month and put everything you have into it, it's fully attainable. So that's what I love about the business. And as always, it's a pleasure always being here talking with you fine folks out there.
All right. Hey, thanks, Lance. Good to be with you again. So again, I'm Dean Jenkins with FollowMeTrades.com. And it's funny, as you're talking about it, it made me think, Lance, that I got a 19-year-old son, and he and his friends love playing video games. And I just a couple times go, hey, put down that Xbox controller. Let me show you the best video game on the planet, man.
That's exactly right. Hey, I will say this, that those video games may turn into trading one day. A quick story, I actually have a friend who bought an Xbox, and I would go over there in the morning sometimes and play it. And I found out, man, my computer hand-eye coordination skills were sharp before the market even opened, almost as a warm-up. So
Oh, there you go.
you
There
never
you go.
know. Never say never.
Who knows where these trading platforms are gone? They might be 3D immersive, VR headset.
VR,
deals.
yeah, exactly.
Yeah, that'd be fun. Okay, so again, I'm Dean Jenkins. Follow me trades. I run a stock advisory service, stock pick service. I have a live trading room, and I have some training and coaching products as well. If you decide you don't want to do all the hard work of developing and back testing a trading system, you're welcome to follow along. I put all of my results on my website here. Here's my year-on-year record. Each year I post complete details of every single trade I take, my trading statistics, and everything I do and claim here on the website is validated. I have an external CPA firm that looks at my website, and I ship them my brokerage statements, and then they produce an audit report. Keep me above board, and just what I say I'm doing. People ought to have a source of confirming that that's really happening. A good way to get involved, if you're not sure, is just to sign up for my free weekly newsletter. It's called Beyond the Noise. Give analysis on the market and key commodities each week, and you just come here and click the big green button and get a free copy of it and check it out. All right, well, that's it. Fun session. I really enjoyed it. Thank you, Bennett, Jim, Lance. It was awesome to hear your comments. And turn it back over to David.
All right, thanks, guys. For everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, you can go to TimingResearch.com to get access to any of the report or show archives. You can also hit the link, the live link at the top, TimingResearch.com/live to get access to the live broadcasts. Be sure to join us tomorrow night, February 13th, 9 p.m. Eastern Time for Analyze Your Trade, episode number 23, the show that I developed with Dean here. And he will be moderating tomorrow night as well. So I just want to thank my guests again for this week. Bennett McDowell of TradersCoach.com, Jim Kenney of OptionProfessor.com, Lance Ippolito of AlphaShark.com, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
Thank you.